All right, so I started trading Forex about 5 years ago. I actually got trained by a guy by the name of Dan Van Dyke. He's 72 years old. He was a financial strategist for Bank of America. He's actually been trading for 42 years in the foreign exchange markets as a financial strategist. So even before Forex went public, he was actually trading on behalf of the banks. And it just made, he just kind of made my general understanding of Forex a lot more concrete. And he gave me, the lessons of being able to teach other people. It was a lot of hands-on experience, so I did lose a lot of money when I first started, just again, like anybody else, because it was just a harder thing to learn. Forex, is a $5.3 trillion market every day. You got the stock market, which is $80 billion a day. So, that liquidity there is just why I trade these markets a lot more than I do anything else. Um, I am hip to cryptocurrency, but I don't really know much about it. That's just me being completely transparent about this. I know it's a big new wave going on with this whole cryptocurrency thing, but I just never was really into it. I never was really too hip on it. So I just spent majority of my time just trading Forex. I don't really dip or dab into cryptocurrency. After a while, I probably will, buy a few coins here and there, but it'll never be in an aspect to where I'm trying to show other people how to do it, just because my expertise is in foreign exchange, is in Forex. So that's kind of like what I like to stick to. I don't like to go outside of my realm when it comes to trading, because there's so many things that you have to learn, even as new individuals. Um, so the way that I was taught how to trade is a concept that was created by a guy named George Soros. George Soros pretty much broke the Bank of England in around '89. He was the only person in the world to actually make over $1 billion in one day trading foreign exchange. So the concepts that he goes on and he teaches, major banking financial strategists and the entire banking sector is called reflexivity. Reflexivity generally is a cause and effect. Cause and effect is what moves the markets. Now, as retail traders, a lot of people are taught, basically the supply and demand is what moves the markets. But generally, it's all based off of expectations of other traders. What other traders expect to happen is what causes the markets to move. So what we do, as professional traders, is we learn how to trap the market, by creating certain setups. Once these setups get hit, then the market should respond in certain ways. Now, we use something called Fibonacci, which everybody should be hip to at this point. If you're not, that's part of kind of what we teach you exactly, understanding the Fibonacci levels and things like that. Now, there's one level in Fibonacci that's really important, and it's the 38.2 zone. The reason why the 38.2 zone is really, really important is because, like I said, if the market is based off of, expectations of other traders, the market generally is fluctuating in price. That's why you have up and down movement rather than, just left and right. The markets can pretty much be as volatile as it wants to be. Now, the 38.2 zone is where the expectation of other traders kind of stabilizes at. So you can have more of a clear understanding of what's going on in the market. Now, everybody is taught, about the 50 level, and they're taught about equilibriums and things like that. Now, one thing about equilibriums is that you have to create them, because in foreign exchange trading, there's no perfect competition. That's more so in commodities and things like that, where there's an actual buyer and there's an actual seller. Just because they say buy and sell in Forex doesn't mean that there's a perfect competition there. It's not really a 50-50 chance. All of that is kind of just fabricated make believe, for the everyday person to pretty much give their money to the markets, because you leave money on the table with that kind of ideology within your mindset. So what we do is we teach you to understand, more of the reflexivity aspect of trading, the causes and effect. Now, if you go back to thinking, more of the mathematics behind trading, because math is what's moving the markets. That's why we have numbers. That's why there's certain price levels. Now, markets moving is something called an X and a Y axis. The X is the unknown, the Y is kind of the known. And if you put it in more of a relevant sense, the X is the technicals and the Y is the fundamentals. Now, the cause would be the X and the Y would be the effect, based off of the fundamental analysis, micro and macroeconomics, and things like that. Now, when you first start off trading, you taught things, such as trend lines, support and resistance, supply and demand zones. All these things are okay, right? But what you got to understand is That's not the end all be all. That's just the beginning of your foreign exchange career. That's just the beginning of understanding such a complex market. And you don't want to just depend on just that. So what we kind of get to is to really teach you how to properly set up your charts using the four major time frames. We teach you how to use the daily chart, 4 hour chart, hour chart, and the 15-minute chart. Now, I'm not going to get into detail about what these charts exactly mean, but these are the four main charts that you use for a specific setup that you see here. These dotted lines that you see on my chart, these are 38.2 zones. And if I go back to what I just previously said about 38.2 zones, this is where the fluctuation of price is pretty much stabilized at. The expectations of other traders are all at one at that level. So when I mean all at one, I mean that 68% of the market is going in the same direction. You know, the other 42% or the other 32% is kind of still in the range aspect of the market. Now, if you look at this setup, this is pretty much a trap setup to pretty much trap the market in a certain range because the market is trading within a range between the high and the low of that daily time frame. Everything else is fluctuation of price. So what we do here at Currency Godz is we just teach you how to properly trap the market using each one of those four time frames and to understand, you know, the Fibonacci levels, because those Fibonacci levels is keys to when it comes to trading. Now, a lot of trading is really based off of psychology, you know, because if you're trading live now, if you never traded before, you kind of wouldn't get this concept. But when you're trading live, you got a lot of anxiety going through you. When you're losing money, you feel a certain way. When you're making money, you even feel a certain way. You know, those are all the emotions, which causes the psychology to kind of change over time. You know, so what you got to learn how to what to do in trading is kind of create a bulletproof mindset. Even when you are winning, you don't want to be overexcited. You know, even when you are losing, you don't want to be hysterical. You don't want to just be so angry about losing because then you have involved your emotions into something technical and fundamental, which causes a problem, you know, which causes a problem within these markets. So again, I just seen a question here. I think that was Eric who asked. So the four major time frames again are the daily chart, the 4 hour chart, the hour chart, and the 15-minute chart. Now I'll just give you the general, you know, labels behind what those time frames mean, but I won't break it down too much in detail because that's kind of what we train you on. So the daily chart generally gives you the direction of the market. It tells you the exact way that the markets are moving. The 4 hour chart is giving you momentum, so you can see how much momentum is kind of taking place within the market for that entire trade period. And the hour chart is where we find a take profit and the stop loss. And in the 15-minute chart is where we enter. Now, when I get to kind of breaking down, you know, the different charts to you during trainings, it's more so in detail, but I'll just break down the 15-minute chart and why is the entry chart. 15-minute candlesticks kind of will evolve a trade a lot faster than an hour candlestick will evolve a trade. So you don't want to be waiting 10 hours for a trade to kind of evolve into a good setup to where you can place that trade because it'll just take too much time. I'm gonna give you an example of yesterday's training with some of my yearly students. Here are just some notes that I'll kind of go over with you as well, just to give you a brief of what it is that we're doing. So if you look at this setup, literally our entry was found on a 15-minute chart. Stop loss in the take profit, which is this margin, is giving you a risk to reward ratio of 3 to 1. Now, the reason why we use risk to reward ratios is the simple fact that we don't want to risk one to make one. You know, it doesn't make sense. It's kind of backwards. We want to risk one to make three. So this setup gives you a risk of one to making three. This is called risk management. You know, it's something that a lot of people overlook when they first start off trading. You know, they just kind of want to put all their eggs in one basket, which is why a lot of people kind of lose money within the markets. Now, I'm gonna tell you this: you're gonna blow accounts. It's normal. You know, it's not the end of the world. It happens. You know, it happens to the best. Blowing account just means that the deposits that you put in, you'll lose. You know, you can lose it until you start to apply good risk management techniques and even money management techniques. That's when you start to see more of a longevity and a long-term trade account. But don't let it beat you up because, like I said at the beginning, trading is a lot of psychology behind it. Anything that you have emotions involved in is causing something to happen to your psyche. You know, and you don't want to be too wrapped up in that because it'll cause you to do kind of make naive mistakes. It'll cause you to make real naive mistakes. So let's look at this setup here. As you can see, the entry point is right where it says entry, those two zones. Literally, both of them got hit. And this red end of this red level was our stop loss. You can see the wick barely almost hit the stop loss. But since the fact that we used the proper setup and we used the proper charts to set up this trade, it prevented us from getting knocked out of this trade. Even if we would have lost this trade, we would have lost generally 11 pips, and we were only aiming for 37 pips. So losing 11 pips to make 37 pips is a good risk to reward ratio. That's a good trade. And as you can see, we literally, like, I want to say about 4 pips away from our take profit. So we currently already in 33 pips of profit, and this was a wick. The wicks tapped us in. Every time a wick taps you in, when you use the proper setup and you properly set your charts up accordingly, so we teach you again the same way that, I want you guys to go back and look at George Soros. He was the only person in the history to make $1 billion in one day trading in the foreign exchange markets, trading Forex, George Soros, Georgesoros, George Soros. So we take the same philosophy and we use the same concepts and techniques that he teaches the major banking sectors, how to trade within the markets. Again, so my mentor taught me that exact same way of setting up my charts, the same way he did when he broke the Bank of England. So when you see this setup, just think about that. This is the same setup that he used to break the Bank of England back in '89, I want to say it was. I might be off a few years, but I think it was around '89 or so. Now, to get into the mechanics of this, the more detailed mechanics is looking at, the big picture of this. If we're trading, for example, this chart here, this is GBP JPY. GBP JPY is basically saying that the Great British Pound is stronger than the Japanese yen. So why did we take this setup? Why did we buy instead of sell? So buying generally just means that the market is going up. Selling means that the market is going down. I got a lot of words here. Let me delete some of this. Keep only the important stuff that I need for right now. All right, so if you look at this, we check the indexes. Each specific currency has its own index. The Japanese yen, the index, the ticker that you type in and look for the index for the Japanese yen is JXY. It'll pull up the Japanese yen index, that alone. The Great British Pound, the index ticker that you type in is BXY. It'll pull up just the Great British Pound index. If I'm buying, I'm generally saying that the market is going up. If I'm selling, I'm generally saying that the market is going down. So if the Great British Pound was going up and the Japanese yen was going down, I should be buying because that means GBP JPY is generally going up. So it's about really doing your research behind after you create your setup. So the first thing that we do, just give you a kind of a play-by-play of how we create a setup for the entire week, because we don't have to create a setup every day. I create one setup for the entire week and I don't have to touch my charts anymore. You know what I'm saying? I might have to do fib extensions. I might have to do, a higher support or resistance area when the market gets to certain areas or certain levels. But I don't have to do them every day. Here, I'm having some issues with the mic. Hold on, give me 1 second. Give me an okay when y'all can hear me again, because I think I got an issue with my mic now. Hold on just 1 minute. Get that fixed. All right, we back. All right. So again, I only have to do one setup for an entire week. I don't have to constantly do a setup every single day. It just doesn't make sense. So what we do is we create our setups on Friday. We create our setups on Friday to get us prepared for Sunday. So the markets are open 5 days a week. So Sunday, Monday, Tuesday, Wednesday, Thursday, or 6 days a week. And Friday, it closes at around, my time is 2 o'clock. Your time might be a little different. And it only closes from 2 o'clock and the whole day Saturday. And it opens back up at 4 o'clock my time on Sunday. And I'm Central Standard Time. opens up at 4 o'clock, and then we place the trades based off of the setup. So when I create my setup on Friday, what I'm doing is I'm just finding key levels within the markets that I'm interested in entering a trade at. And then right after I create the setup, I do something called my index trading or my index research. So the index research is basically seeing if the Great British Pound is actually stronger or weaker than the Japanese yen or whatever currency pair is involved at that time. I'm seeing which one is stronger and which one is weaker, so that way I know which direction to take within my trade, within the markets. So during this same time, I'm doing a lot of, different things. I'm looking for certain patterns within the markets to kind of confirm certain things. So it's a lot more intricate than I'm kind of just, I'm just kind of giving you the blueprint, just a vague blueprint of. We do. So after that, as soon as the markets open up, potentially I'll enter a pending order, or if it's already at my entry zone, I'll do an instant market execution. But let me tell you the thing about instant market execution. It's exactly what it says it is, an instant market execution. It could kill you the moment that you enter that trade. So you want to really be careful. It's better to do a pending order, or something like that, to where it's a lot more structured and you can kind of get a good price, get a better price, because everybody knows the simple scenario of buying low and selling high, but not everybody knows how to take that into account and how to actually use those to your advantage. You can't buy low and or sell high without knowing where the market is. So you have to kind of contain the market and trap it so that way you know how to kind of proceed. Now, after you got everything and generally set up, you can now start to begin the trade on Sunday. Now, when you're entering these trades, you want to kind of find the best opportunities possible. So if the market and the indexes are kind of going haywire and is not above or below 10%, because a 10% gain on an index is basically indicates a true trend. A 10% loss on the index is also a true trend. So you want to see if that index is above or below that 10% range. And as you can see, GBP index was at 14%, so it was confirmed as a bullish trend or up. JPY index was at negative 28%, so it's confirmed as bearish or down. And you see, I waited till Friday to the market's close. Now, there's a reason for that. The simple reason is that, like I once told you in just the beginning here, is that what moves the markets? Expectations of other traders. What is the markets doing based off of the expectations of other traders? It's fluctuating in price. So I don't want to try to create a setup why the market is fluctuating in price, because then you get inaccurate data. Your data is not sufficient enough to kind of withhold, more of a longevity. It doesn't have enough momentum to hold for a longer period of time. So Friday is the best day to set up your charts to start placing trades on Sunday. Now, don't get confused with all of this, trap days and everything like that. That's market maker methods that scare you. The whole market maker method thing that a lot of people kind of, real hip to and real hyped about. That's kind of meant to just keep you out of the market as a new trader, because there's things that you don't know yet. So now let's just take a look at USD JPY now. So what we're doing on is we're actually potentially waiting for that wick. It's literally going to be a wick into this market, into this position, and that's 113197. Once it either wicks us in, then we kind of solid. Now let me show you what I'll do, and I actually took this off the chart just so I can show you this. Now, when I'm thinking of, placing this trade, like I said, this entry point was found on a 15-minute chart, right? And our chart, what did I say? Take profits are found on the hour chart. So if I come over here and I'm on tradingview.com. So if you're new to trading and you just kind of want to see the charts, get a general feel for what it is and what's going on, go to tradingview.com. And it's free. You don't have to pay for anything, and just start looking at the charts, daily. Take a look at the charts, see what's going on. They got all, you can look at cryptocurrency on here and everything. So it's all there. So what I would do for this potential setup, this is the first test, so now I'm waiting on a wick to come and kind of hit the second test. It looked like it might have already did. Almost. Wait. Yeah, literally almost there. Literally, it was like 6 micro pips away from hitting that setup. But What I want you to do is kind of just start to get familiar with the charts, getting familiar with training your eyes to see what's kind of going on now and what's kind of occurring. So here, if I'm looking to sell, you see this long position and short position, right? If I'm selling, I want short position. I'm literally just gonna click right on my entry zone, and this will pop up here, right? Now this is a second entry of this same exact setup for today. So one already take profit, got hit, boom, got to get out, and the next time is about to happen again. So what I want to do is you look here, risk to reward ratio. Like I said, if you want to risk one to make three, watch this risk to reward ratio. I want to make it say 3 to 1 or close to 3 to 1. So therefore, I'm not risking many pips. Um, let's see. 3.8. So this is risking 5 pips to generally make 16 pips, which is a 3 to 1 risk to reward ratio. So this is a pretty good setup. Now, a lot of people look at it like, man, that's pretty tight. It is tight. It's a tight setup. But if I'm only risking 5 pips, it's nothing. You know what I'm saying? It's nothing. Like, and you see it literally just hit it and it popped right back down. So what I'm gonna do is I'm gonna go to a minute chart. Let's actually see. So this is the entry point. Now, like I said, it's 5 pips, just to catch 15 pips. It's not something that's gonna kill you. It's not something if you lose this trade, you lost this trade. It's no big deal. So I mean you gotta kind of take your emotions away from it. But generally using the setup that I'm showing you now is gonna keep you in a good standing. It'll generally keep you in a good standing. So it's not the end of the world. Um, so that one, let's say that one got hit. Let's go to let's go back to the hour chart again. All right, so that's the big picture. This is just the big picture of what you want to do and how you want to do it. Now, a lot of times, we focus too much on just the trading aspect. We don't focus enough on the money management, the risk management. These aspects is what's kind of important when it comes to trading because this keeps you from losing more than your gain. So you want to keep that into play. And money management is good for a lot of things. It's not just for trading. It helps you manage your money better. It helps you be more of a solid trader. So let's just kind of go over some of the money management and risk management techniques and concepts real quick while we just kind of watch this play out. And like I said, it's 5 pips. 5 pips is nothing. To make 17 pips. This is like just showing you how to get razor sharp entries. Just razor sharp entries every time and is using it and playing off those 38.2 zones. So the risk management aspect of it. So let's say you have $500, right? You only want to risk 10% on one single trade because the thing of it all is you don't want to put all your eggs in one basket. So for $500 for that entire trade day, you literally have $50 that you can risk. You have $50 that you can risk, and that's not bad because if you lost that whole day, let's say you lost 10 consecutive trades, or in this case scenario, you can lose up to literally 20 trades. You still have $450 in your account to keep trading with. So look, $50 risk for the entire trade session or entire trade day. So your lot size should be generally looking at 0.05, at least until you get a little better. Once you get a little better, you can kind of leverage your account a little more. You're risking 10 pips at max. 10 pips at max is all you really want to risk. This last trade that I kind of showed y'all over here, this was risking 11 pips. It wasn't too far off, 11 pips, 10 pips, whatever. It's no big deal. So you're risking 10 pips at max. Now, let's just say you had a zero point 0.1 lot size and you really risk $1, So if you're risking $1, you want to make at least $3, to make that trade count. That's 30 pips and risking 10 pips. So risk 10 pips to make 30 pips. It's perfect. Now let's talk about the risk to reward ratios. So the risk to reward ratio again is that 3 to 1. Think of it in the compounding method, aspect of trading. So using your risk to reward ratio, let's say you got 10 positions, risking $50 in total on each one. Um, your general compound can be you risk 50 to make $150. You risk $50 to make $150. That's how you trade, and that's how you trade to compound and create compound interest, which will kind of pay you more over time. Pays you a lot more over a longer period of time. So we trade to compound. We trade to kind of make money over a longer period of time, not just making money for just one day. We don't just want to make money today and then not make any money tomorrow. I'd rather make, $50 a day, $100 a day, $1,000 a day, whatever the case may be, whatever position you in to kind of capitalize, just make it and make a plan of action of compounding that, $50 a day over generally 5 days, $250. Okay, but you spent how much time? How much time did we just spend looking at this chart that I just set up here? This takes no time. This generally takes no time. And it's just the best method of kind of creating wealth. This is how you create wealth. A lot of people look at trading as a marathon or as a sprint race rather than a marathon. Trading should be more for a long term thing. This is something that this is intellectual property that you'll be able to pass down and teach to your kids over time. As they get older, you'll be able to introduce new concepts to them. And that's where a lot of people get confused at. Instead of telling your kid to go get a job, tell them to make money, then they'll get more creative. Instead of just saying, go get a job when you turn 18, go get a job when you turn 16, tell them to start making money. You can start telling them at 12 years old to start making money. And I guarantee you their mindset will kind of shift because now they think of making money rather than going to work for money. So you got to really start to change the paradigm. It's a paradigm switch. Go make money, or what I'm saying, not go work for money. We don't work for money. That's backwards. So this kind of just give you that option instead of you just telling them what to do. Now you can show them what to do. Look, son, or look, daughter, you sit down, you do this, and look, work it just like this. This is the plan. I got a plan for you. I created it for you. Run it now. You know what I'm saying? You know how to do it. So this the general idea of, and the only reason why, this should be your why for trading. Even if you don't have kids yet, you will eventually, and you don't want to have them go work a job when they can go make money, in different ways. So that's the whole purpose of this. It creates real time freedom, financial freedom, and it actually makes you a lot more creative. It gives you more options. It gives you more opportunities. Like I don't taught over 8,000 people all over the world, people from Germany, France, Mexico, New York, California, Florida, everywhere over the world. Like everybody on this webinar from another place over the world, around the world. You know what I'm saying? Like my guy Matt. Matt is in Alaska right now. You know what I'm saying? He's all the way in Alaska right now. I got my guy Anthony. He in Chicago. I got people on here from everywhere. So it just actually just opens up more doors to you to kind of network and connect with more people as well. Especially when you like-minded people attract like-minded people. So that's the number one thing with it. Let me just kind of show y'all, the opportunities that I got for y'all as well. On top of this. Now, for one, everybody on this webinar, you can get this free training DVD, mail it out to you, send me an inbox, let me know. I'm going to show you exactly what it is. You can get the training DVD instead of paying for $75 for it just for getting on this webinar, just for listening to me. Literally, the shipping might be like $10 for you, just depending on where you are, and it'll show you exactly how to trade. So this is our website here. Now, we literally created a whole company based off of education, teaching people how to trade. Now, don't worry about none of the prices and the numbers on here at this current moment. As you can see, yearly training, $8,000 is what people pay us. But don't worry about none of this stuff right now. There are different opportunities that I'll explain to you that you can take advantage of that's going to be not even close to the amount here. This just shows you value. That's all I kind of want to do is kind of show you the value. So this DVD right here, give it to you for free just for getting on this webinar. Literally send me a message in my inbox and we'll set it up for you. I'll send you over a link, calculate the shipping costs for you so that way you know exactly how much it'll be. Just pay the shipping and handling and I'll literally send it right out to you. So now the opportunity though. The opportunity is the whole reason why we all on here. I wanted to show you exactly, what it is that you'll be learning from me, what it is that you'll get. I wanted to show you that, in detail as well. But let's talk about the opportunity here. We are partnered with a company called iMark is Live. And literally 13 minutes, if y'all want to talk to a guy that's worth $50 million, $50 million, that's six zeros behind that 50. $50 million, and he gonna explain to you the opportunity that we kind of have presented for you guys. You can hop on another webinar with me, and with the rest of the team. It's probably gonna be over like 5,000 people on this webinar. So you guys can hop on this webinar. You guys worth $50 million, got more money than Drake. Literally going to explain to you what he did and what he created for you, and what he created for us to kind of take advantage of. This is the site, right? So for my people who knew, for my people who are already involved with IML, that's cool too. You can still got opportunity here to get training from me, get trained from me. It's all good. You can take advantage of it. Just reach out to me, and I'm always willing to work something out with you. We can work it out because I know like not everybody got $8,000 for a year. Not everybody can just fork over that kind of cash right away. So IML. This opportunity here is literally $150 a month, $195 to start, $150 a month to get you what's called IML Academy. This teaching you the general basics of learning how to trade. Now this here is vague, right? This is getting you started and through the door. But what I'm gonna do is twice a month we'll do one-on-one training sessions. It'll literally just be me and you on a webinar, and I'm showing you in detail, in depth, how to properly set up your charts like I just showed you now, how to properly look at the market, how to look at the market with more of a bias to where it's basically the same way that George Soros trades, the reflexivity concept, the reflexivity theory, really break that down to you. So that's IML Academy. Like I said, that's a little vague, and just to get you started in your foreign exchange career, to start learning simple things like trend line, support and resistance, the general terminology, because that's the hardest thing to learn when you first start trading is the terminology. They got another thing here that's called IML TV. IML TV, every day, professional trader gets on. He pretty much explains to you his outtake on the market, and starts to give you more of an in-depth training. But the problem with a lot of the group trainings is that you don't have that one-on-one experience. Questions don't get answered with big groups. It gets answered with individuals, one-on-one. So that's why our company decided to step in and to kind of give people more of an edge rather than just make it real vague for them. So we give you more of an edge. Every training DVD that we have, you automatically get. You get our whole access to our whole training library. And remember when I told you we taught over 8,000 people. So that means you got more training, probably about, I want to say 100 hours of actual one-on-one training with me and another individual that you can kind of see them grow over that period of time, and you will be able to learn stuff as well. Now, this is called a earn as you learn process working with iMarkets Live. So generally they got something called FX Signals Live. They send you signals, they tell you when to buy and sell. But we don't want to just focus on dependency. We don't want to depend on things like that. So that's why it's more better to have a real mentor, somebody that's going to take you step by step. They got swipe trades, the harmonic scanner, different things. Hold on one second, guys. So they got a lot of tools that you'll be able to take advantage of. This again is 150 a month, 195 to start, and they kind of map everything out for you. Fusion traders and web analyzers. So it's a lot of tools that you can use. But this kind of the opportunity that, we kind of here to kind of offer you, and present you. Now, if you're already in our group, the Facebook group, that I do give out, a lot of things. I give out a lot of setups and stuff like that that you can really start take advantage of. We got the Currency Godz market overview group. to where we kind of actually talk about the markets once a week, which is tomorrow or Tuesday. We'll actually do the weekly first or second week of talking about more of the markets and getting you more in detail with it. So you can just stick around for that if you like. But if you're ready to kind of just get started and really see what's going on, inbox me after this webinar. I'll send you the exclusive link to the guy, Christopher Terry, $50 million man, who will really you can really learn more of that. You can learn more about what IML is. I kind of told you about what Currency Godz is and what we have to offer, but they'll get more in detail about, this here, which is a lot more affordable for the everyday person, rather than $8,000 a year, $195 a month. That's a lot more reason, or $150 a month. That's a lot more reasonable for everyday people. So that's pretty much all I got to say on this webinar. Send me a message if you want me to send you the link to the next webinar after this with Christopher Terry and the rest of the team, and I'll be more than happy to do that. That's literally about to start in about 8 minutes. So if you can get at me before that, because I will be on there, I'll send it right to you literally in seconds, and we can continue to go from there. If y'all got any questions, send me an inbox. Let me know. And I'm gonna also send y'all the status on this trade, what happened, what formed, give or take. It really don't matter on my end. Like I said, 5 pips, who cares? But I do just want you to see the power of it. I wanted you to see the power of what it is that's going on. Right now we have 113187. So already in profit off that, just that setup and it already being hit. So that's a good sign already. So thank you everybody for taking your time out. Appreciate it. And let's grind together, man. Let's make it happen. Send me any questions that you have, and let's keep going. Let's make it.